Welcome to another episode of That Crazy Triangle Guy. Today I want to go over a couple of scenarios that I think Bitcoin could possibly follow over the next couple weeks. Now, I just pulled these completely out my arse, so take it with a grain of salt. But before we get into it, I do suggest that you adjust the playback speed to make me go a little bit faster because I tend to put people to sleep. So, all right, so let's get into it. We're looking at Bitcoin US dollar index on the 4 hour time frame. And so we did have this big dump down to close that gap that everybody's been talking about for the past few months. And didn't close it all the way. We don't necessarily need to close these all the way. Just come down, get in there, do a little dancing around in there, and fill it somewhat, and that's good enough. However, we did leave some behind, some of the gap open, so you do want to keep that in mind for potentially coming back down and filling it. Now, then I'm sure y'all are gotta be completely aware of this pump we had, $10,000 pump on Sunday morning while I was sleeping, mind you, and not what I had planned on. I had planned on, coming back down here, and filling my bags. But so that was that, but by now you've all figured out, and I knew it at the time. I'm like, this isn't. We're gonna dump back down, of course. We're gonna dump back down overnight. I told my friend that. I said this isn't. It's just a post Trump made on True Social. I said you need Congress. It's not real. It's nice and everything. And I'm sure he has every intention in the world of fulfilling it, but the market's not gonna fall for that. They want Congress. They want a message from Congress saying, "Hey, we're gonna be voting on this strategic reserve thing." All right, so maybe if Senator Loomis says something or whatever, maybe they got some sort of thing worked out to announce on Friday. So we'll just have to see. But what happened? We did get rejected. Came right up here, got rejected off the 55 day. Yeah, 55-day moving average. Is that the is it the exponential that I have there? It's the 55-day exponential moving average. I get these all confused. And then we also have the 21 week simple, and the 21 week exponential there in pink and blue. And the up here in red, we have the 100-day simple moving average. And in the aqua here, we have the 200 simple moving average. And so we came up here, got rejected off the 55, which we've been doing a lot here recently. And we came right down and bounced off of the 200-day. So that's good for now. But the scenario that I see playing out here, first of all, a lot of people were looking at this inverse head and shoulders pattern, which kind of funnily enough got fulfilled with that announcement here. Worked out perfectly, and then dumpy dump. But what I saw was that although this is a little tiny head and shoulders in here, also what I see, especially since we did not completely fill the gap, and we may come back down to something like 75 or whatever, I see a shoulder here. That's what I see, a shoulder. And the start of a head formation here. Now the head has to come down below the shoulder, which would bring us down here and close that gap. But also, looking at CoinGlass Bitcoin liquidation heat map on the 1 month with the symbol checked here, and we're looking at the 1 month chart. You see all this liquidity down here, and where does that liquidity end? Oh, really? 71? No. How about this right here? Let's click up right there. 72. Huh. Well, la-di-da. Maybe we do. I don't think we. I don't. Hope we don't go down that far. Hope it'd be kind of bullish if we just stopped at. Huh. Well, we'd have to come down quite a bit. I thought that was 75. Did this change? Did somebody change this on me? Anyway, so 72 is the number then, I guess. That'd be quite a dumpy dump, but still possible. Anyway, the scenario, this number one scenario, mind you, because there is a number two that's a little bit better. Number one scenario is coming down there and sucking up that liquidity, closing the gap. That would be getting into the price action of the previous high back in 2023. So might be really, really scary. So looking back here at the chart, this is what it looks like. What it would look like, possibly. These vertical lines here represent the, on the 12th, next Wednesday, we have the CPI data release. Market is always interested in the CPI data release, so much so that every October marks the bottom of the cycle and start of a bull rally on the CPI data release in October every year, pretty much. Go check it out. So that's that next Wednesday. And then on the, what is this? The 18th and 19th, we have the FOMC meeting. I think I told someone it was the end of the month. I thought it was the 28th and 29th, but I don't know why I thought that. But it's the 18th and 19th, which is a lot better. And this in particular, CPI data release, FOMC meeting, has a little asterisk on it, and that means it comes with the economic projections, whatever, where they do their little dot plot thing or whatever, where they think the interest rates will be whatever sometime later in the future. So that's that. So that's a big deal. And I think the market's going to want to wait around for that. So this inverse head and shoulders would look something like this, I believe. There's the shoulder, here's the head, and here's the other shoulder. Of course, it would have to, I have it coming down to 75. It'd have to come down to 72. More like down to the bottom of my pink little thing there. So, you know what? Let's just move this down there. Might look more something like that. So that's the worst case scenario. But even though it's the worst case scenario, look where it ends up. It ends up way up here. So somewhere blasting off into the sunset. But also maybe possibly, you know what, I'm going to move this back up here. Just assume it's going down to 72. I don't know how low it might go, but I want to move it up because I want this thing to be more up here. And I think that if this did play out like this, a potential target for the top of the well, it would be in line with some sort of a neckline here. but it looks like the 55-day moving average, exponential moving average, may be in the vicinity of here for another rejection. Now, this is assuming, too, that we dump into the CPI data, and the data is good, and we pump out of it. And then we dump back down into the FOMC meeting, and then we pump out of it because it's good, too. And that is quite often what happens. Again, go back and check that out yourself. So, scenario number 1, that's it. Scenario number 2 is a little bit better. But before we leave here, I do want to correct something. I said this was the US dollar index. This is actually Bitcoin on the Coinbase chart. I'm using this because it has a lot less lines than the other charts that I have been using. So now let's move on. Now we're on a different chart. This is the Bitcoin US dollar index on a different chart, different whatever the word is, setup, different. Not the old chart. It's a whole new system here. Now we're looking back in time around the election here, and a week after the election, actually. Weekend. Oh, that is the election right there, in the very little corner there. And boom, pumped up. And since then, we've been consolidating in. Now, this white channel, I did not draw to match this price action. This white channel has been there since the beginning of Bitcoin history, and it's the channel from which all parabolic bull rallies start. And let's just go over it quickly, I guess. Oh, shoot. Anyway, where are we? Here we are back in 2019, 2020. And you can see we did not consolidate within this channel, but we consolidated on top of it and held it as support, and then bounced off it to begin our parabolic bull rally in 2021. And so that's that for that cycle. And then here again, even this mid-cycle rally started by consolidation in this channel, and then bouncing off of it. And the 2017 rally did not consolidate within channel, but it acted as resistance here, and then we broke through it, did a little thing here, and then came right back down to the top of the channel. And as that top of that channel held support, we started our 2017 rally. And this channel acted as resistance this whole time here. And then back here in this area, when was this? What year was this? 2013. Well, you can see even initially here, well, I guess it's not initially, it's kind of like this other rally, 13, oh yeah, so wait, this is 13, this is 13. Anyway, so this mid-cycle rally brought us up to this channel. And you can see the top of the channel acted as resistance here on this pump up here, and then the bottom of the channel also acted as resistance here. And even, I think, yeah, even here on the daily time frame, you can see how the center of the channel acted as resistance here, and these daily candles close, or the daily candles opened and closed right on that line there. So anyway, that line's been there forever. And then in this rally, the parabolic bull rally, you can see that we did consolidate within the channel. And the parabolic bull rally again started when we broke out of that channel. So all these cycles have something to do with this channel. And it's been there forever. And I drew it way before, way before, when we were back here. I don't think it's probably in, I don't know when exactly I drew it, but it was some here, way back here in 23. Maybe even, I don't think it was as far back as 22, but at least in 23 somewhere. I mean, I did not move it or anything. And what happened? After the election, we moved right up into that channel and consolidated in it. All right, so that's that. But here, we've fallen out of the channel. Now, I don't believe this is the end of our cycle. Oh, we end this cycle in the channel and never break out? I don't think so. I think we're going to bust a move out the top of this channel and start a parabolic bull rally. Like everyone's saying, up to a couple 100,000 or whatever. But probably a little bit later. So we exited this channel and essentially kind of just coming down in this other channel down this way thus far. So this is getting really long, but the good part is coming up if we're still holding true to my second thesis here. There's a blue channel. I recognize this blue channel forming. I said, hey, well, you know what? It's not really. This is on a daily. I drew it on a 4-hour. On a 4-hour, this little wick and this little wick touched there. So we may have to adjust this. Anyway, it's real. It's in preliminary. It's in the preliminary stages. But let's switch to a 4-hour because that's how I drew it. Although I did anchor the points on Mondays, right? Let's click on that. Yeah, Monday's at 0 hours. So, but you know what? I did draw it on 4-hour wicks. So that's why it looks a little bit different on the daily time frame. See, it catches that wick there perfectly and perfectly on that wick there. Actually, to be honest, I could move that up a little bit. But, and I know there's a magnet thing or whatever, but that would put the points on those wicks, and then if you change to different time frames, it messes it up. So let me make this a little bit bigger, though, so we can... Hey, where's... Oh, that's not what I want to do. I want to do this. There we go. So, the blue channel, touching these two wicks here. Because I got to thinking. Now, everybody just went through a lot of effort to shake the F out of this market and get everybody to get out of their positions. Get everybody to sell off, to deleverage their positions and everything. Then whoever went to a lot of effort to do that. Now, typically it wouldn't pay off, I don't believe, for them to dump again on us this quickly, because I don't think anybody's filled their positions. I think a lot of people are still waiting on the sidelines. I think a lot of people are out of the market waiting to see what the hell's going to happen. And this is when they want to catch us. So I drew this blue channel. You can draw it on your chart. And it'll be very easy to see if this is not going to play out, because what would happen is once we break this, then we got to look for something else. that this scenario may not play out, and that should start to think about something else happening. So connect those two lows and then pull your channel up so that the top of the channel hits this high here, the Trump announcement high. Now, you'll notice here on the 4-hour chart that drawing it like that, you can see, hey, you know what? These candles here seem to be hitting the bottom of this channel as resistance, and they're sloping up at the same slope as the channel. Yeah, maybe there's some sort of legitimacy to this theory. And you can even see here that this candle, now all I did was connect this one and put the top there. But you can see though how it also acts as resistance here for these guys. And this candle comes down and hits the center line right there. It stops on that center line. So, go figure. And this green candle right there is just like right in the middle. We got a red candle coming down, a green candle of indecision in the middle, and then, or not necessarily, well, whatever. And then this red candle dumping back down all the way to the bottom here. So, kind of makes sense here. And what we've done thus far, since I spotted this, we're holding it. And we are bouncing here. And remember, this is also, I don't have this moving averages on this chart, but this is also the 200-day simple moving average. So we're up at 84.1. We were down as low as 82.5. Tomorrow, well, before we get into that, let's look and see what could be happening here. So now, if this does hold, I imagine what we would do is kind of chop sideways maybe along this channel. Wednesday, we start getting job data, I believe. Let me look here on my computer. We get the ADP employment on Wednesday. Which they always adjust. It's always way off a lot of times. And then it'll be 50,000 and then they change it a few weeks later to 200,000 or something like that. So, but that's that. We have that on Wednesday as well as some other info. And then starting on Thursday, we have Thursday we have the initial jobless claims, which we get every week. I got some other data, and Friday is the jobs report. And Friday is also, looks like there's a lot of Fed governors speaking on Friday, and Jerome Powell speaks on Friday, and we get consumer credit as well. So a lot of stuff going on Friday, plus the crypto, whatever. I haven't even read about it yet. But I know Trump's got some sort of big crypto thing on Friday. So might we just see some consolidation upwards here, and maybe we come back up here to the center line, back up to 90,000. In the meantime, this week, kind of just dancing around here, playing around. And then Friday, yeah, maybe midweek we come back up to the center line. Then Friday, I don't know, kind of dump into the jobs data. But maybe the jobs data is good. And Jerome Powell says good things. Who knows? Or maybe we start pumping up, and then Trump has his crypto meeting thing. And possibly we come up here to the top of the blue channel, like we did here, like we did there. This is making a lot of sense, come back up to the top of the blue channel on Friday, which intersects the bottom of the most important channel in Bitcoin history. Right there. Pretty closely. Now remember, I said I did need to move this up just a hair. So that might adjust this here a little bit sooner. So yeah, Friday night, Friday evening. I don't know when that big Trump crypto party thing is. I know it's not really a party. There was some sort of a party a few weeks ago, but this is some sort of a big meeting. That could bring us up here, and then what if it's a sell the news thing, and we kind of fall off over the weekend and kind of dump down into the CPI data, because uncertainty is always scary. We don't know what the CPI is going to say. I imagine a lot of news people will be talking very fearfully about how inflation's creeping in, and we don't know what the CPI numbers are going to be. So then possibly after the Trump rally, hitting the top of the blue channel, kind of come back down in the CPI data and come back down to 93 perhaps, or not, maybe somewhere. Yeah, maybe all the way to the bottom of the channel. Why not? And that actually, look at this. If we go sideways from that point, where does that hit? It hits this top right here. Kind of pretty close. About 94 and a half. Anyway, the general vicinity of that. So that's pretty interesting. Actually, it comes right into line. Now remember, I do have to adjust that, but it does come right into line with this kind of consolidation right there. So that's interesting. And then CPI numbers are good. They're good. And we go back up. Maybe we break into this channel. Maybe we come up here to 110. Another to match our high. Maybe we surpass it a little bit, come up to the center line of this channel, get up to 112, and then dump into this thing here. Wait, I don't want to move my thing. And then dump back down into here, back to 102, and then off to the moon we go, or somewhere. So anyway, that's scenario number 2. So keep an eye on this price action right here. Draw your channel and see if this holds. Well, I think I've been rambling on long enough. Was there something else I wanted to show you? I did want to take a look at the stock market futures here. They're just looking, at least they're in the green. Nothing spectacular, but this is not always an indicator of how things might play out. I think it was green last night, and then look what happened today. So, and I'm talking about, by the time you see this, I would be talking about the day before, or maybe even 2 days before, depending on whenever you see this. I'm talking about Monday. So Sunday, heading in, I think, if I recall, these were green on Monday, and then overnight they started turning red. So you never know. That doesn't really mean anything, but I like to see it in green anyway, just to make me feel better. So let's see what happens with U.S. market open on Tuesday. And right now, thus far, the European market isn't, well, I guess we're starting to rally upwards, looking at the 5-minute here. Asia initially dumped and then just consolidated sideways. Now Europe is, well, so far we're coming up a little bit. Seem to be heading up this way. So pay close attention to what happens with the U.S. market opens. Europe might get us back up to where we were trading before Asia dumped. I don't know. Maybe not. Maybe they just keep going sideways here. But if we do come up here, wherever we go, see if we dump down to this line. But be very careful because we could wick through it, and you know they're very sneaky lately. They'll make you think we're going one way, and then they'll totally reverse it the other way. They've been doing that a lot. Starting off an hour in one direction or whatever, starting off some certain time period in one direction, and it's the opposite of where everything's really going. So, all right, we'll leave it there. And I don't know if I'll be making a video when next, but hopefully one of these scenarios plays out and you are ready for it when it happens. All right. See you next time.